Time now for the markets with Leighton. As we've noted already, lots of trade developments this past week.
And coming up, Mike, we'll have a look at some of the market reaction to that news. Of course, the ceasefire and the trade war between the U.S. and China fueled some optimism in several quarters this week. Also ahead, why the on-feed report is positive for cattle prices, as a new sign indicates China's growing concerns about African swine fever. Many ag commodity markets are hungry for export business as we approach the end of the year, so farmers in general are cautiously optimistic about the 90-day truce in the trade war between the U.S. and China announced December 1st. Futures prices for soybeans, corn, wheat, and cotton were initially higher at the start of this week on the news. The president of the American Soybean Association, John Heisdorfer, says the negotiations couldn't come at a better time. Quoting him now, "Let's get these U.S. soybeans rolling back to China." U.S. beans are in need of support on two fronts, exports and planted acreage. The USDA is now forecasting oilseed export business will fall by $3.5 billion in fiscal 2019. And some traders fear U.S. farmers will plant far fewer acres next year as well.
We all know our exports are running way behind. Soybean exports are 25% below what they were, what they should be according to the 5-year average. And so that's a little disappointing. Our meal exports are down, and so are soybean oil, just faintly, both of them, but still they're less. And so the USDA, WASDE, finally lowered those. And of course, then the end result was it shoved our carryout to an all-time record high. It was last month too. And I think with all the negativity that the bean market has had, I think that acres this next year might decline more than you think. We'll see what happens.
The wheat market this fall is being described as a sideways trade for the most part. However, analyst Ted Seifert is confident these days the downtrend line in the wheat charts is now broken.
That is the good news, but it hasn't really given way to an uptrend. It's just given way to a sideways trend. Potential things that could sway that, you know, there's a lot more talk again about Russia limiting exports. We saw the USDA lower their production number by 1 million metric tons last month on the October WASDE report. We saw them lower Australia 1.5 million metric tons. So hopefully that means that further on down the road we can see more exports out of that. But until we do, I think we're just kind of stuck in this rut. And soybeans and corn aren't really helping things either.
Well, let's see if today's trivia quiz will lighten the mood a little bit. Today's question, it's about a product that boosts sales in the dairy sector each holiday season. And here it is. What country is usually credited with creating the beverage eggnog? Is the answer A, Germany, B, the United States, C, France, or D, Britain? We'll have that answer coming up for you. Cattle producers are applauding the new United States-Mexico-Canada agreement, saying it secures greater access for their product in the Mexican and Canadian markets. Another positive for the beef sector turned up in the most recent cattle on feed report from USDA. One number came in lower than expected. Extension's Josh Maples joins me. How much did cattle placements change in this new report?
So cattle placements were a little over 6% lower than they were in October of last year. Big decrease, but the big story is that it was about 5% lower than we expected it to be. So we were only looking for about a 1% decrease over last year. That brought down the total number of cattle on feed. So we're sitting at about 11.7 million head of cattle on feed. That's 3% above last year, but again, lower than we might have expected it to be ahead of this report.
How much will this likely tighten supplies in 2019?
I don't think we're looking at tight supplies yet. I think the story is still larger supplies, but maybe not as large as expected. So I think we're still kind of in that mindset, at least for a while longer.
Does this mean producer prices won't really change much then in the short term?
I think this is positive for producer prices. So we look at, you know, a lower placements number, a little lower number of cattle on feed than we expected. And you put that together with this continued strong beef demand, and you know, all of this is really positive for cattle prices going forward. So again, it's larger supplies, but we're working through these larger supplies pretty efficiently. And so put all that together and it should be a positive setting for producer prices.
There's also positive news as far as the hog industry in this country. Reuters reports China is buying U.S. pork again, even though there are tariffs of 62% on the item. Two conclusions from this: swine fever is spreading, and China is concerned about running out of pork.
47% of those hogs are raised in backyard situations. You think about it, how do you control that when you're raising, 2 and 3 sows at a time? So it's an issue, it's spreading. And the trade definitely, we're $3 a hundredweight off of the last summer highs. Supply is going to be up 5% over a year ago. Fundamentals are flat negative. We're $20 over what the government says we're supposed to be on average. So it's a big premium for the African swine fevers in the market. Is it going to be realized? That's the question mark, really.
Back to the trivia quiz now as we wrap up our markets for another week. What country is usually credited with creating eggnog? The answer is D, Britain.